Jeff Trapp. Thank you so much for coming on the Inner Edison Podcast. Appreciate you being here today.
Yeah, Ed, thank you so much for having me. I'm glad that you invited me on the show today.
All right. I've read a lot about you because that's kind of what I do. Not a ton, but I read enough. And I know you're in the tax planning profession. I assume a CPA or
Not
EA?
not a CPA, but a EA tax
Okay.
strategist. And, I've been doing this for 17 years professionally and actually been preparing taxes since I was 16 years old.
Well, question for you. I don't think a lot of people understand what the difference between was it EA and a CPA is.
Yeah, that's a great question. So a CPA is more like a general practitioner doctor. They can give you kind of an overview of a lot of different things, whereas an enrolled agent specializes in the tax code. We actually receive our licensure from the Internal Revenue Service. And so all of our exams and everything that we do is very, very heavily based upon tax, whereas a CPA is more general, or it's based upon a whole lot of different things that don't really apply to tax. So I would say we're more like your general brain surgeon. We have a specialty.
Yeah, I was going to say you're more specialized. Yeah, exactly. You do the one thing that you focus on, and that what we tell everybody to do is find your perfect client and focus on them. That's what you do. You focus on taxes, and I assume there's different little niches in there, whether it's a corporation or or someone's personal return. Different things you do differently for tax planning for the future.
Yeah, 100%.
Now, did you always want to get into the tax profession? Was that your goal as a child?
It wasn't my goal as a child. So my stepdad's a tax attorney and CPA. So he was in the profession his entire life, had his own practice. And I just saw how strenuous that was for him, and the late nights and long hours, and dealing with clients and the IRS and all the things. And I was like, there is no way that I'm ever going to do this. So when I went to college and came out of college, I just kind of went into general business and stayed away from this profession. But I helped out in the firm growing up, preparing tax returns, and I'm like, there's no way I'm going to do this.
So what brought you to the profession then?
So what brought me back is I spent a few years out in kind of general business doing sales and marketing, and not having a steady paycheck, living on commission. I realized that fee that you take in for a tax return or for doing tax planning, that kind of bread and butter work, isn't so bad after all. Having a steady paycheck to support your family with. And so that really is what brought me back to the profession when my wife and I started having kids, and it's worked out well. But now being a business owner, I feel like I'm back in sales and marketing all over again.
Yeah, but the only positive thing is you build in your business. You build clientele. They stay. If they like the job, they stay year in and year out. Unlike other professionals or other companies where you can't build things, you can build it, but it can be torn down by the government. I guess yours could be too if they just said, okay, 10% tax, flat tax, and we don't need to make any write-offs,
Yeah.
or tariffs only and no taxes.
Yeah. The problem with that is all the corporations and the billionaires pay too much in taxes. So they would never do that.
Yeah, well, of course. What are you going to do? All right. So starting your company, which is Tax Planning Pros, from what I can read, correct?
Mhm.
That's right. You started that 15 years ago. Is that correct?
No, I actually was out in public accounting working for several firms. So we started 8 years ago in
Yeah.
2017 out of a failure of mine. I was working for a firm, and they wanted to bring me in as a partner. And we had some disagreements of kind of what that would look like, and, the buy-ins and different things like that. So I was let go. And from that, I had a decision to make. Was I going to go ahead and start my own firm and kind of believe in myself, or go back to work for somebody else? And that day on my way home from the office, I called my wife from the coffee shop and said, you know what, honey, I'm going to start my own firm. And she was freaking out. And she's like, no, call the recruiter, call the recruiter. And I said, no way, I'm going to do this thing. And within about 2 months, I had replaced my monthly income and just kept on building from there.
This must have been like January, February then, right?
No, it was actually, I got let go after the October 15th deadline, but
Well, I was just gonna say, it usually takes a while. Taxes are due in
yeah,
certain times, and yeah.
yeah, I was, able to reach out to my clients and just say, hey, I'm starting my own firm. And if you want to come with me, that's great. If not, that's okay too. But I'll give you, 15% off last year's bill if you want to come with me if you prepay up front. So that was able to get me started.
There you go. That's the way to look at it. Get prepaid up front and 15% off. And I assume you had a lot of people who took advantage of that.
Yeah, I had quite a few people take advantage of that. That allowed me to kind of get my feet underneath me and then build my business, through referrals and then eventually through LinkedIn and reaching out to people through that medium.
Yeah, because building your practice just, takes a while to do that. And the fact that you're able to do it right away, that's commendable to you. And that goes back to building I would say, I don't know if you did, but building your own brand, as long as you build your separate brand from wherever you work and whether
Yeah.
you even have your own company. I try to explain to people, just because you have a company doesn't mean you build that brand only. You got to build your own brand, because maybe you sell that company and then you're nobody and you got to start all over again.
Yeah. And the big thing that I heard from clients was, well, I don't know the owner of that company. I've never worked with them. I've only worked with you, Jeff. Why would I go anywhere other than working with you? And so really, you want to go out there no matter where you work. You want to do your job in excellence and provide a great service. So if something like that does occur, they're coming with you instead of, sticking with, the firm or the main company.
Right. Now, growing this company, I assume you had some Edison moments. And what would you say is perhaps a failure or a challenge that taught you, a valuable lesson?
Yeah. So I remember early on starting my firm, and you know this was kind of the days before Zoom, and you either had to one meet with people in person or two meet with them over the phone and try to sell them over the phone. And I think I met with I, I want to say it was probably 60 prospects without getting anybody to come on board as a client. 60 non-closes in a row. And man, that was tough because usually tax services sell themselves. But I mean, I heard every objection in the book, everything thrown at me under the sun. And it was one of the most frustrating points going through that. But looking back, the thing that I saw was I needed to go through that and learn how to handle those objections and handle those moments in order to take the next step forward for my firm and actually grow it. Because then, one, I was able to put in the infrastructure and the things that people were looking for and be able to communicate better, the value that I provided as a tax strategist compared to just, somebody who picks up a tax return and prepares it.
Right. You needed to become the authority in your area. But what
Yeah.
a lot of people don't realize, you have to get a lot of no's and then find those objections and then now put those into you don't like it, but your sales pitch. Basically, you would need to make sure you cover every objection that you've ever received in your sales pitch, and then you don't have those objections. So you need to thank people who give you objections so that you can add that in. So if going forward, you can hit all those points. And that's a Zig Ziglar, not me. I learned that from Zig Ziglar. So
Yeah, and he's 100% right, and it hurts going through it, but when you come out on the other side, it's a really, really great thing.
well, I did, I still do, but a lot of lives. I mean, like, probably got, with radio and everything I've done, 10,000 hours in doing this. And a lot of people ask me, why are you doing this? I'm like, to get good at it. And
Yeah,
then eventually not care, meaning that I care about my product, I care about that, but I don't care if I make a mistake. I don't care if certain, you just keep rolling on. It's when you're first getting going that you make these mistakes and they affect you. but eventually you learn from them and just keep moving forward. Because like my radio's live and they expect you to make mistakes. So even on these things, when we make mistakes, I don't take them out because people want the true you. I hate the word authentic. So that's why I try not to say it.
Yeah. And, when I first started my business, I hired a business coach and a business mentor in the accounting space. And, one thing that he would always say is done is better than perfect.
Right.
And I kind of just took that process and, took my lumps and failed. But as long as I was moving forward, that was the most important thing for me.
Right. And a lot of times it's just get going and then get good. That's,
Yeah.
one of my old coaches said that, Steve Sims. He's like, just get going, then get good. And that's the most important thing because a lot of times we'll sit there and try to get perfect and just keep sitting there and not moving forward. And we need to move forward because you don't sell anything or do anything unless you're moving forward. All right. So let's talk about businesses and taxes. What is the number one mistake that most businesses make with their taxes? Is there one? I don't know if there's one. There could be like the same five, but I'm just curious.
Well, I mean, I would say this for business owners. I would say this for individuals. The number one mistake is people don't proactively tax plan throughout the year. A lot of folks may not even know what tax planning is, right? They might take their tax documents down to their accountant, get their tax returns prepared, and hope and pray they don't owe any money to the IRS, right? But proactive tax planning is you're working hand in hand with your tax strategist throughout the year to make sure that you're paying the least amount of tax possible. So when you go have your taxes prepared, you're not surprised with where your tax liability ends up at. And most people who are familiar with tax planning say, well, that only happens in December, Jeff. And it's like, no, if you're not moving money around before December, you're missing out on 11 months worth of tax write-offs and tax deductions. And that's the biggest mistake I see.
What about different types of corporation, whether it's an S corp or C corp, whether it's an LLC or whatever? Is there one particular better for a person than one of the others?
Yeah, I mean, it really depends on their revenue and their type of business. I would say, the most common when you're starting out, we'd recommend forming an LLC because with an LLC, you have the opportunity to elect to become a partnership or an S corporation or a C corporation, but it allows a lot of great flexibility. And I would say most small business owners, if you're, under that $10 million mark, an S corporation is going to be the best thing for you, but you do need to make sure you look out for industry and then state tax considerations because that may not be the best avenue for you. So it's very, very important that you consult with your individual tax strategist to determine, hey, what is the right fit for me?
Yeah, that's not the best fit for if you're doing a mortgage company or the Department of Real Estate in California. You can't do
Yeah.
it with an LLC, which is dumb, but you can do it with, if you're under the financial corp, side to do mortgages. I think it should
Yeah.
be the same, but what are you going to do?
Yeah. Unfortunately, I don't make those laws.
Yeah. Well, they say because they don't know who the owner is, right, of the LLC. Well, now with the new FinCET, whatever that thing is, where you have to say everything, you would think that they would get around it. But I guess, is that still going forward? I can't remember. First it wasn't, then it was, and then it wasn't, and then it was.
Yeah. So right now it's not moving forward. They expect to have a meeting in late March to determine if it's constitutional or not. And so we will see what happens.
So everybody who did it early or should have waited till last minute.
Yeah, possibly. But I mean, the people who filed don't have anything to hide. The people who
Right.
aren't filing, your terrorists and money launderers, they're not going to file anyways. So it's really, I think it's pretty dumb.
Or individuals who don't like the government to look at
Yeah,
everything
yeah,
about there are those people who think the government shouldn't be
yeah.
involved in everything, you know.
I,
Yeah. Give me small government, get out of my way, let me just do business. I understand there's people who take advantage of that and there's certain things. You're going to have that 1%. There's nothing I can do about that.
yeah.
But the other 99 shouldn't have to pay for it.
Yeah, I mean the cartels, they're not going to fill out their, beneficial ownership information report. So
They're not. They're just going to close it up and start a new one each year.
Yeah. Yeah, exactly.
Unless it's the hotels in certain places, right?
Yeah.
Yeah. Because a lot of cartels own a lot of hotels in Mexico. That's their legal business.
Yeah.
Yeah. All right. I know I'm missing something because it's not that easy about taxes. So you say plan your taxes all year long.
Yeah.
One thing I want to talk, you did say about doing the S corp. The one thing about that is you have to be careful because you take a salary and then all of a sudden you could have a lot of money you get hit with personally for as a tax because you're an S corp, even though you plan and all of a sudden I got 100 grand I got to take as income. And that can really mess up your tax strategies if you don't know what you're doing.
Yeah, I mean, the S corporation is a great pass-through entity, but you're required to pay yourself a salary. And if you don't pay yourself the correct salary, one, you can get audited by the IRS. That's a huge red flag item, and that's where we see most S corporations get audited. But if you pay yourself too much salary, then you're paying in too much payroll taxes and overpaying taxes there. So you've got to make sure that you strategize properly when it comes to a fair salary, to make sure you're getting your fair share, not overpaying your income tax but not overpaying your payroll taxes as well. And so that those are things that we look at. We look at different ways to maximize your deductions. There might be deductions that you're not taking advantage of, and if you're not reviewing your financial statements on a monthly basis, I guarantee that you're missing out on tax deductions. And then, there's those legal loopholes that we can jump through that allow us to incentivize you to get more tax deductions. And the government provides those incentives because, you're stimulating the economy or other businesses, or you're, employing people.
Right. Now there are people out there who start a company and they get busy and they get behind on their taxes and then they get behind on their taxes. And it's like, seems like it's a major ordeal to get caught up on. Do you guys work with any of those people to help people get caught up?
Yeah, I mean, we help people get caught up on their taxes. A lot of folks, the IRS will typically send out notices as far back as about 6 years. So we try to file at least 6 years back, get them caught up. Work with them to maybe get structured on a payment plan to pay those back taxes, because the IRS will obviously want their money and things like that. You have a lot of folks that come through that, hey, I need a business loan or a mortgage, and I haven't filed my taxes in a while. So we've got to make sure to get them caught up. I think the biggest thing in the way to be the most productive to get those taxes filed quickly is get your financial statements up to date, meaning your profit and loss, your balance sheet. And then, hopefully you have some money set aside to pay those taxes if you're a profitable business. And you probably have to be profitable if you're trying to get secure some type of loan or credit.
Yeah, I just know a lot of, last 2 years, a lot of mortgage companies have been having some issues because the volume just dropped drastically compared to what we were used to in a lot of companies, and a lot of loan officers got laid off and let go. But I'm just saying I think a lot of times people get behind, not necessarily on their own. They have a bookkeeper who's supposedly doing stuff. And then all of a sudden they go, oh, I'm sorry. Here's all your books. I'm done. And by the way, you're a year behind.
Yeah, and unfortunately, that does happen. Over the holiday, Bench Accounting, right? They are an AI-driven bookkeeping firm. Said, we're done. We're closing up shop. Here are your financial statements. Goodbye. And this is a big company.
Who was that?
Luckily, bench.com. And then they were bought by another company like 2 days later, and they said, we're back open again. But for those 2-3 days, people were freaking out because, hey, I don't have access to my books. Hey, you guys are still a year behind on getting things done, and now you're out of business. You're supposed to be a big corporation, and they're trying to undercut other accountants and things, but they weren't really doing their job. So what we're seeing is a lot of people coming out of the woodwork saying, you know what, I want somebody who is US based, not a computer, that will talk to me, that will meet with me on a financial or on a regular basis. So we meet with our clients on a monthly basis that we do their accounting for, and make sure, help them make their business profitable.
Now, Do you guys have your own bookkeepers in house, or how do you help your clients find bookkeepers? Because I think that's the biggest headache, is having
Yeah.
somebody put that stuff in their books on a regular basis, because as a business owner, you're got a lot of hats and you need to give away
Yeah.
stuff you don't do well. Most of us who are business owners, the doing the bookkeeping and that kind of stuff is not our favorite thing, and we hate doing it. Otherwise, we wouldn't be running a company or doing sales.
Yeah. No, yeah, we have in-house accountants that handle all of that for our clients. So they'll do the month-end reconciliations and update the balance sheets, the profit and loss, and make sure that our clients are tax ready when they do their taxes. There's an investment to get that done, but just like you're a specialist in what you do, Ed, right? Typically, our clients can go out and make more money if they're not dabbling in their books, and they can go out and sell their services to pay for ours. And it tends to be a good investment because we end up finding tax deductions or errors from prior bookkeepers, and maybe we even talk about amending tax returns. I remember one gal, her books were atrocious. Her bookkeeper had closed up shop, and so she needed to find a new bookkeeper, and she came to us. Well, she had a line item on the profit or on the balance sheet that basically unreconciled expenses, and it was on the balance sheet. And so we went through, and there was $80,000 of unreconciled expenses. Well, 72,000 of them were actual business expenses. So we were able to go back and amend tax returns for 3 years, and we got the client like $40,000
Right.
just because we cleaned up the books. So you probably don't understand bookkeeping and financial statements. Maybe you do better than most, but most business owners don't.
Right. I do, because I'm in the mortgage industry, and so I do. So I have
Yeah.
3 perfect clients: business owners, because I have had off-year corporations. I know all the different structures because I've had them as a business owner, and then veterans and reverse mortgage. Those are my 3 favorite things to do, and that's all I focus on. But I understand balance sheets, but profit and loss, how things are supposed to be and where the money is. And, oh, did you buy that car? Now you wrote off all this depreciation. Well, we can add depreciation back in for your income because of that.
Yeah.
And that's, why people depreciate certain things, and they can write things off. Uh, but it's important to have good books and have the stuff proper and have people do it. But I think a lot of people are getting tired of, because I had that happen to me with a bookkeeper who all of a sudden, here's your stuff. Oh, by the way, I didn't do anything this year. But except for the payroll, thank God. But then she didn't even pay my last payroll tax and all this other stuff. It's like, thank you so
Yeah.
much, lady. Appreciate you. Yeah. But yeah, and that took a while to get fixed and cleaned back up. But it's something that we have to have our books right, because we have to do profit and losses and balance sheets all the time to get approved at different investors. So we need that information on a timely basis.
Yeah. Oh, 100%.
Yeah. So what I'm trying to is make sure you go through an accounting firm that you like, or I should say a tax preparer, planning professionals, and then have them recommend a bookkeeper. Some of the ones I deal with, the guy I deal with, he does his own bookkeeping, because he
Yeah.
was like, otherwise it's wrong, Ed. I want to make sure it's in there right. So when I go to do this, I don't have to do it again.
Yeah, 100%. And I think a lot of business owners and people in general see taxes and accounting as a cost, and it is when you're overpaying in your taxes every single year. But if you're working with somebody that knows what they're doing, and it can be an investment with a real tangible ROI, where you might get 3 to 5 times back what you spent because you're doing things correctly. And we see that all the time. Unfortunately, in the past, we've had to fire a few clients because they've had such bad bookkeepers, and they just don't understand that, I'm going to pay this guy $25 a month or whatever it is to do my books. And it's like, I can't file a tax return like this. I'd go to jail,
Right. What else is there? All right. Now I know I'm missing something. This is not my forte. I'm not a tax person. You are. But I'm a
Yeah.
business owner, so I understand about this. So what have I not asked you that I should have asked you?
Yeah, that's a great question. So, I mean, I think a lot of people, forget to ask, their tax preparer or CPA or tax strategist or accountant, what am I missing out on? What am I missing out on as far as deductions? And, and what should I be asking them when it comes to planning for my taxes? So you have business owners and you have high net worth individuals that make a lot of money on a W-2 maybe. And, if your accountant or CPA or tax preparer is looking at your W-2 or profit and loss, and they're like, whoa, you made a lot of money. Well, I guess you're going to pay a lot in taxes. You're with the wrong person, because there are opportunities to save money on taxes. There's a reason why our new president or current president, hardly pays any taxes, is because he plans throughout the year. He has great strategists on his team. It's the same way for Jeff Bezos and Mark Zuckerberg. And a lot of people don't realize that those opportunities are out there for them if they are just willing to invest or take a few minutes and listen to this podcast and call up a firm like ours to save that type of money on taxes.
Yeah, it's important because one of the things about Trump's taxes is because he does real estate. You can, if you're building real estate, you're putting it forward. Because I did a transaction for a gentleman who does a ton of multifamily, and if you look at his taxes, he was broke. But if you really look at his taxes, he made $2 million. If you really knew how to figure it out, and that's what you have to look at is they all go by what the tax code is, and they use the tax code. The tax code's there for a reason. If you use it right and you save money, that's what it's there for. It's for business owners because you're making jobs and everything else, and so they benefit you. Now, so I want to back up and say, so I used to be a C Corp forever in my industry because I wanted to keep cash in my company, and then I was pushed to go to an S Corp because I'd save on taxes. But for me, I'd much rather have the company pay taxes and then me take what I need when I need it, as instead of an S Corp. So a lot of people, well, you're getting taxed doubly. I understand that, but that's okay because of how I want to structure my company. I need so much money in here as an asset. If it's an S Corp, I can't keep anything here as an asset. Correct?
Yeah. Well, I mean,
Like
you
if I
can
want to
keep
have
cash.
100,000 net worth each year, I would have to, at end of the year, it says, okay, any profit I got to take as an S Corp. Right.
Yeah. I mean, you have to pay tax on that profit at the end of the year. So, depending on your goals and where you're going and growing to, there's going to be different entity structures that you'll need to utilize. And, we have clients with several different entities, moving money between kind of those entities to get them to the most optimal tax position. And so there's some really, really great opportunities out there. And then, like you mentioned with Donald Trump, he doesn't pay a lot of taxes because he's a real estate investor. We have real estate investors who haven't paid taxes in 5, 6, 7 years. But if you pull their net worth and you look at their actual income, they're some of the wealthiest people that we work with.
Now, what state are you in?
We're located in Texas.
Okay. You say that proudly. What I'm getting at is there a bet? So I'm in California, which is bad for taxes, but is there a way? So say that you live in California but you're going to set up a company that is all over United States, right? You're going to have people all over the place. Can you set up a company in another state and then still have people who own it in other states? Are you following what I'm getting at? Or do you have to have it?
Yeah. So you're kind of getting at, a way to mitigate your tax liability because you're in a high tax state. So, I started my company out in Dana Point, California, Southern California, 8 years ago. And we moved in 2018 out to Texas because of high taxes, right? And so, what you can do is if you're living in California, you're going to have to pay taxes in California. However, if you're living outside of the state of California and you have business or clients or sales that they so-called you have in California, you can set up a separate company that just does California sales essentially and just pay what's owed to California. And if you live in a different state, keep what's owed to you in that state. So, each state has their own tax laws, and some states want a piece of the pie, and some of those states don't mind where you're located.
Well, California wants every bit they can get. Doesn't
They
matter where
do.
you're located. Yeah.
They're talking about doing an exit tax in California. So if you leave the state, you have to pay a tax to leave the state. So,
Yeah,
uh,
all those guys are gonna be out of office in the next 2 years. Mark my
yeah,
words.
well,
This LA
we'll see.
fire
I mean,
LA fire is
yeah,
gonna cause all those people to move more back to the middle, and it's gonna get better again.
yeah. We'll see what happens there. But if all those people have to exit California that lost their homes in LA fires, right? I mean, those are some very, very high net worth people, and if that tax comes down the road, they want to tax those folks for up to 10 years, which is insane.
Yeah. Well, I mean, and a lot of them would, because only I you don't know this, but half of them only are getting 50% of what the house is worth because that's the insurance they had on there, and a bunch of them didn't have insurance, so they're even hurting worse. So you're going to take this. So if you're only getting 50%, it's not enough to rebuild, but you could sell the lot and get your money and just sell the lot away, and then move to somewhere else like Texas or somewhere else. But a lot of people don't understand property tax problems when you move to
Mhm.
places like Texas. And because it's 3% property tax, and that tax goes up 10% a year, meaning whatever the value of your home goes up, 10% of that hits you a year. Where when you were in Dana Point, only 3% of whatever that house went up each year could affect your taxes. So in Texas, your taxes double about every 10 years. In California, it takes 30 plus.
Yeah.
So, I mean, as much because I tell a lot of people were leaving California because, like you said, because of taxes. Well, sit down there and run the numbers, and you got to make a certain dollar amount and above for it to make sense. And most of the people who left California were nowhere close to that.
Yeah. No, I definitely recommend, when you're making a big move like that, you know, make sure that it's the right fit for, you and your family and your long-term goals. And, there's great opportunities in California, just like there's great opportunities out here in Texas. You don't have any state tax, and, the cost of living, depending on where you're at, is a lot less. And so sometimes it does make sense to pay a little bit extra in property taxes.
Yeah, well, it depends on your situation. Everything's different. For me, I could not handle the humidity that's in Texas and the other stuff that you get in Texas that I lived there for about 3 months when I was younger. And that was enough for me during the summer. And I always tell people, go where you're going to move to the worst time of the year. If it's Texas, it's during the summer. If it's Chicago, it's the winters. You have to do that. Florida, summertime,
Yeah.
to see if you can handle it, because it's a lot. And if you from California, you're not used to weather, a lot of bugs, you know, those things that screened in porches. Why do we have screened in porches? Because of bugs. So you're
Yeah.
laughing because I grew up in Colorado as a kid. I know exactly what's out there. All right.
Yeah.
So that's, a
It's
lot of
an
people tell me,
adjustment.
yeah, a lot of people tell me, why am you left California? And I'm like, I'm on talk radio. I can fight all the way through, and I'm going to stay here because I want California golden again. I'm tired of how tarnished it is. And we'll make those changes eventually. But you have to move with your family to wherever makes sense for you. And then just,
100%.
and plan. But as I always say, before you leave, wherever you're leaving, rent out your house, go rent there where you're moving to. Once you say this is the place for me, then buy the house and then sell the house, especially in California, because you just went up another 15% that year you were figuring it out.
Yeah.
Yeah.
That's good advice.
Yeah. Because I know a ton of people already back
Yeah.
in Texas and Florida, because Florida, the biggest problem in Florida is that average insurance cost is 14 grand a year.
Yeah.
Yeah. So but again, as we're talking tax planning, you got to plan your life and
No,
plan your business, plan everything, plan, hope for the best, plan for the worst, period.
yeah. And, that's a great point. Just like you look at your profit and loss statement for your business and, where your income and your expenses go and grow to, and, you'll negotiate with vendors on your business. You need to do that in your personal life, and to maximize the cash flow that you can have. So, you can either save for retirement, go on that vacation, save for college, and create a really great life for yourself. At the Tax Planning Pros, we don't just focus on taxes. We really want to create a long-term wealth legacy for you and your family. And we really our goal is to create, generational wealth, like the Rockefellers. We don't want to be like the Vanderbilts where our wealth is gone in, basically 3 generations. We want to be able to keep that wealth for a long, long time.
Yeah, but what, 80% of the people, third generation, all the wealth's gone.
Yeah.
Yeah, it's pretty sad. I used to go to a local country club, and you'd see the second generation out there spending it, and then the third generation even worse. And then next thing you know, nobody has money. So it's important to focus on your future, but focus really actually, I would say one thing: enjoy life, whatever that is to you. Also, because you can plan and plan and plan and never do anything, and then go to do something and you pass away. So I would tell you, enjoy life as you're planning your life and doing things. Please enjoy it. It's too short of a life.
Yeah, definitely. And create those memories for you and your family, those things that they'll remember. It's not really the stuff or the money that matters. And, if you do that, I think you can set your family up for some great success.
All right, Jeff, it was nice having you on the show today. Your website's the taxplanningpros.com. You're on LinkedIn as Jeff Trapp, Trapp. And then under Facebook, it's Tax Planning Pros. Is that correct?
Yep.
Okay. Gotta tell you, AI works wonderfully for me.
Yeah, they do a great job.
Just don't do it for your taxes, is what we're saying.
No, not yet. It's going to be several years before it gets to that point. So
I did use it the other day when I was qualifying a business owner with the bank statement loan. I had it add up all the deposits and verify everything and double verify, and it still made a mistake on adding.
Yeah.
Yeah, they're not perfect. They will make a mistake. It's just like everything else. So just be careful.
Trust but verify.
Always. All right, Jeff, anything to say before we go? Anything else?
No, I really appreciate the time today, Ed. And, it's tax season. So let's make sure that you're doing all the things to help you save money on taxes.
All right, Jeff, thanks for being on the show today. Really appreciate you being here.
All right. Thanks so much. Bye, Ed.
My pleasure. Let's see here.